Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at our W3 or Wave 3 trade setup. This is the setup that allows you to find the strongest and longest wave in a completed Elliott wave 5-wave sequence, which is the Wave 3. But before we start the video, we'll have a look at our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing, or put another way, all professional traders know and understand, but more importantly accept, that losses can and will and do unfold. It doesn't matter what trading approach you have, there always will be losing trades. Right, let's have a look at an example that unfolded on Friday using the MES, which is the micro of the ES or the USE Mini. There's the same trade set up on the actual ES itself, but I wanted to show you how we can do this with a slightly smaller account. Normally we use a $20,000 account. You can see up here risking 2% of that, which means a $400 risk, but I'll have a look using a slightly smaller account, say a 10k account, in today's video. So what is a Wave 3 trade setup? Well, a Wave 3 trade setup is, as we can see on this chart here, is it allows you to catch the Wave 3 in Elliott wave terms. But before we start this, we have to backtrack a bit and just remind people who haven't been watching these videos very often that MTPredictor is not a black box system. We don't believe black box systems work because we believe that markets basically are random about half the time. In other words, there's no discernible pattern about half the time. You can't do any kind of analysis about half the time. So what we do is we then look to try and see when the higher time frame picture is clearer, and when it's clearer we then decide to then have a look at our shorter term pattern to then be able to uncover our trade setups. In other words, we only look to analyze the market about 50% or half the time. The rest of the time is purely random and you can't do anything at all. Right, so let's go back and just outline exactly what a Wave 3 trade setup is. A Wave 3 trade setup, as you can see here, is designed to catch the Wave 3. Now the Wave 3 is the strongest and longest in the completed 5-wave sequence. If I put the major swings on this chart here, you can see we're using NinjaTrader 8. Just put the major swings on here. There's the major swings. You can see this is what it looks like. Here's the start of our sequence. The initial move off the low is considered a Wave 1. The initial correction, which you have here, is considered a Wave 2. The most common minor pattern in a Wave 2 is an ABC correction. So if I do an Elliott wave intermediate here, you can see in a second we have our ABC. So that's the ABC down into the Wave 2. I'll just clear that all off. We're then looking to trade the Wave 3. And if I right mouse click here, do Elliott wave major, you can see this is what we find. In other words, we're looking to trade the Wave 3 swing. So we're looking to get in at the end of the Wave 2 to trade the Wave 3, and because this is the strongest and longest and completed 5-wave sequence, it represents the largest profit potential for the smallest initial risk. Because if I now place our analysis on here, just give it a second to draw, so our internet connection is a bit small. You can see here we use our position sizing to keep our initial risk small and control. In this case, less than 2% of we're using a $10,000 account, so the initial risk will be $200. So when the trades go wrong, I don't say if, I say when, because as in the risk disclaimer at the start, you will always have losing trades no matter what approach you take. When the losses come through, they're kept small, or what we call one risk unit. When the profits come through, as they did in this particular trade here, you can see that this would have actually got you long off pretty much the low of the day there, up to take profits at our typical Wave 3 WPT. This would be the target for our trade, and it would have come out at that WPT target, which caught pretty much the high of the day, and the profit would have been 11.5 R, or 11.5 times the initial risk. In other words, this profit would be 11.5 times the losses that come through from the other trades. And you see that's why we like this particular trade setup, because the profits are large, not just in dollars, but large in relation to the losses. In other words, the risk unit here is large in relation to the losses. So how did we find this? Well, as usual, we start with our higher time frame charts. This is a 3-minute chart, so we'd have gone out to the 15-minute. I'll just take that the major swings off. Just bear with me for a second, just so it doesn't quite so confusing. There Okay, I'll just take those off just with our intermediate degree swings. So how do we start with this? Well, we use our DPs, and for this we place them on previous swing highs and lows, and then we project in advance. This is the most important thing, as these are on the chart in advance. So before Friday even opened, you can see here, I'd have gone to this pivot low, right mouse click, done decision point. That would have given you an area of support. Now that would have been on the chart in advance before the market got down there. In other words, it's a leading indicator. You can see the market came down and found the low as of pretty much the low of the day the previous day. So let's have a look at see what that meant on our 3-minute chart. You can see there's our 15-minute support. This is what we're looking for. When the market reverses at our anticipated levels, we then deem that the picture's clear. In other words, we're in the clear 50% of our analysis. In other words, the market is not random, it's in a clear pattern. So this is when we decide we can then start to look for our trade setups. So this is when we start our Elliott wave sequence. This is how I also develop my unique isolation approach to Elliott wave, in that rather than trying to fit the patterns in all the time, it means that they don't work half the time because the markets are random. That's why I believe Elliott wave basically falls down as traditionally taught so often. What I do is I look to only use the patterns in isolation, and only when the large degree picture becomes clear. So here the market is doing what we anticipate, reversing off our hard time frame support, which is on the chart in advance. Therefore we deem that we start the sequence there. Therefore the initial move is up is wave 1. We're then looking for the ABC correction. So literally hours before this setup came in, you could have been anticipating that this is the setup you'd have been looking for. So right back here, you'd have seen the support, you'd have seen the market started to unfold, you'd have been preparing for this in advance. So it's not as if you're in reaction mode, trying to react to what a scanner says to you, or in this case the market analyzer says to you. You're basically able to predict or anticipate what you are looking for in advance. It doesn't mean to say it will unfold, because the markets can still be random, but still you have an idea of what you're looking for. So here you go, when the setup comes in, which it did here, you can then have a look at our MTP trend. Our MTP trend had gone blue, which indicates that the market, the large degree trend was up, so that confirmed what we said earlier, that we're coming off higher time frame support. Therefore this would be a good trade setup to take. We place our analysis on, and that would have been our target. As I've said previously, our position sizing was taken care of by using the number of contracts were taken care of by using position sizing to keep our initial risk small under control, and that allowed you to get into a long trade. And as you can see, this was the result, where we had a lovely trade pretty much off the lows of the day there. You can see just came off, that was the very bar of the low of the day. The next bar reversed back up again. Would have had you long, you'd have stayed long all day to come out at our typical wave 3 WPT target, which would have been there, and the result would have been a profit of approximately 11.5 times greater than the initial risk. In other words, the profit was 11.5 times greater than other trades you'd have taken at other times, which would have been losing trades. And again, this is why it's one of our favourite trade setups at MTPredictor, because it has the ability to catch the end of the wave 2 to get you in at the start of the Elliott wave 3, and the Elliott wave 3, because it's the largest and or the strongest and longest in a completed 5-wave sequence, therefore has the potential to have the biggest move, i.e. produces the largest profit for the smallest initial risk. And as you can see, that would have been a very, very nice trade on Friday on the MES, where you turn an initial risk of just under $200 into a profit of around about 2,200, or 11.5 times greater. So an absolutely perfect example of our W3 or wave 3 trade setup, as shown here on our MTPredictor add-ons for NinjaTrader 8 that unfolded last Friday.